Today I'm talking about VA loans. There's going to be some great changes coming in 2020, and I'm going to share with you a video I did a while back about VA loan myths where I talk about Tidewater appraisals. Hi, I'm Amy Hayslett and I'm a realtor in Phoenix, and on this channel I talk about moving to Arizona, life in Phoenix, and the Phoenix real estate market. So if those are of interest to you, go ahead and subscribe to my channel so you don't miss anything. Now, let's get started. Beginning in January of 2020, there's going to be some changes for VA loans. And the number one change, which is going to be very beneficial to VA buyers, is that the minimum loan amount is going away. The current loan amount for zero down with a VA loan is $484,350. Starting in January, that's going away and there will be no loan limit. So, if a VA buyer can qualify for $1 million loan, they can come in with zero down. Other change that's happening in 2020 is that the funding fees will go up by a slight amount. So as an example, if you are doing a zero down and it's a first time use, the current funding fee is 2.15%, and that will go up to 2.3% in 2020. So not a huge amount, but all in all, I think the changes for 2020 are going to be good for our VA buyers. Now, let's go to the video that I did about a year ago where I talk about 3 of the myths on VA loans. Hey guys, it's Amy Hayslett here, your Phoenix West Valley Realtor. Hey, I just helped another veteran family get into a home, and I want to talk to you about the VA appraisal because it really gets a bad rap by some in our industry and the general public. And there's a lot of myths about the VA loan and the appraisal, so I want to talk about that. So first of all, with the VA appraisal, a lot of people are concerned that the appraisal is going to come in low. That generally has not been my experience. If the appraisal is going to come in low, it's going to come in low with probably any type of loan. But the nice thing about the VA appraisal is that there's a mechanism called the Tidewater Act. Basically what that is that the appraiser is required to let the buyer's agent and seller's agent know ahead of time if they think there's going to be a problem coming up with the value. And that gives the agents the opportunity to provide the appraiser with comps so that they can justify the price. It's a much better process to do it beforehand than afterwards, which is what you're normally going to be doing with FHA and conventional loans. And in this case, we were able to get the appraisal to come in at value by providing the comps to the appraiser. The other myth that I often see with appraisal loans is that the inspection's going to be a lot more difficult and the appraiser's going to call out things that need to be done to the house. Now, while VA and FHA loans often do require more than a conventional loan as far as conditions on the home, if the home is a newer home, you're probably not going to have any issues. And furthermore, most of those types of issues are issues that the buyer's going to want the seller to address. And the third thing, as far as myths on the VA appraisal that I see, is that the VA appraisal stays with the house. Well, that's just not true. Now, that is true on an FHA loan, and what that means is if buyer number 1 comes in and the appraisal comes in low, then every buyer after that is going to have to use that appraisal. Again, that's true on FHA loans. It is not true on VA loans. So the VA loan is a very strong loan and a great loan for veteran buyers. If you are selling your home and you get an offer for a VA loan, it's something you should definitely consider and talk about it with your listing agent. Thanks for watching my video about VA loans. Let me know if you have any questions and share your comments below about your experience as a seller selling to a veteran buyer, or if you've ever used a VA loan. Have a great week and I'll see you next time. Bye-bye.